It's fascinating to see how India's alternative asset landscape has evolved remarkably over the years beyond fixed deposits and gold and mutual funds. So in your opinion, what are the most compelling opportunities in this space?
Good morning to all of you. Yeah, I think right now when the industry really started maturing, when the new regulations came in, which is now called the Alternative Investment Fund Regulations. And I would probably think that, the first set of funds that were raised was funds that were investing in real estate. It coincided with the government's, opening up of real estate investment for foreign investors. And as you know, real estate is a very significant component of the Indian savers' savings pool. And that went on to spawn other asset classes over a period of time, over the last nearly 20-odd years. Private equity was always there. It was called a venture capital industry in those days, but now it's matured, and we now have a variety of private equity funds operating in India. And the interesting part of it is that the domestic investors have really warmed up to alternative assets in the last, I would say, probably 6 or 7 years. Otherwise, it was dominated by global investors. And I think that's the big change. And this is a change that is likely to, continue to sort of tilt the balance with regard to, the global capital flow versus domestic capital flow.
Srini, just before we came to you, we were talking about how SEBI has proposed changing the rules and regulations that govern the mutual funds. How are you approaching these changes to mutual fund regulations in the Indian markets, and to what degree does this unlock opportunities?
I think, there are two different sets of regulations. So the mutual fund regulation is one which covers the retail investor, and the alternative fund investment regulations covers the larger high net worth family office investors. As far as the mutual fund regulations go, obviously the market is maturing, and therefore the liquid mutual fund options for more retail investors. The regulator, which has always had a fantastic feedback mechanism to make new rules and regulations, have engaged with the industry. And these options that are now being put on the table for the mutual funds with regard to, for example, longer tenor dated paper or more retirement planning kind of options in the mutual fund industry, just increases the menu of options for savers in India. And towards that end, I think it just indicates the maturing of the market. Similarly, in the alternative asset side, about 8 years ago, there were very few kind of opportunities. Now you have venture debt companies, private credit, infrastructure, of course, not to speak of the real estate investment trust and infrastructure investment trusts. All of those are, options now investors have in India.
Srini, how alternative is alternative in an environment where, again, we just touched on this story before we came to you. Coin DCX suffered its second hack within a year. Would clients therefore be well advised to stay away or approach cryptocurrencies on a very selective, very cautious basis? What's your advice to the alternative investment crowd?
I think the general advice is, whether it is crypto or anything else, if you don't understand the underlying, stay away from it, and at least rely on somebody else who understands it better for you. If it means that you have to part with some of the economics for better understanding, that's probably the right way to go about doing it. Of course, truly spoken as a fund manager. Having said that, with regard to crypto specifically, I think there is a fair degree of skepticism in the Indian market in any case. The central bank regulator has been very, very cautious on the development of the crypto as an asset class per se. So it's very, very small component of some very select set of sophisticated investors who currently have an exposure to the crypto industry. So it's not material.
Yes.
It is still largely gold, mutual funds, and private credit funds and such like investments.